Today is the 26th of March, today being a Thursday, and in relation to the economic calendar, we had high impact news at 8:30, simply just being unemployment claims, so nothing too interesting, but taking two trades on the Nasdaq, one during the Asia session and one during the New York AM session. So we're going to take a look at both of these trades. And of course, as per usual, going on to the higher time frames in order to get a general perspective of what's going on. It's not like much is really changing, to be quite honest, from the day to day, because we're still in this rather high resistance maneuver in terms of, the unwillingness to really deliver, but we are delivering down towards sell side, which is the overall fact that we're looking at when we're looking at the daily. And that is something that I've been saying every time I'm doing my pre-session outlooks, is that in relation to the order flow that I'm looking at when it comes to the daily chart, I am looking at bearish order flow. We have the series of up close candles, a bearish order block, and then we have the return back into these series of up close candles, and we have this candle that delivered into these series of up close candles, failing to even close inside of the order block. And then what we end up taking a notice to is the fact that we are observing how the previous monthly low is being utilized as resistance. So we're seeing price action being very shy around the previous month low every time it is engaging with it. So in relation to daily, I'm still standing on that bearish standpoint, but I've really just been taking long positions. So today being Thursday, I know I took two longs. So during the Asia and New York AM, yesterday I took one long position, but that one got break even. And to be honest, I might even squeeze that in because I just didn't even bother doing a review on it or even posting the execution video because it was a high resistance liquidity run. And honestly, it actually would have been quite good to actually do a review on that, to be quite honest, but I'm not going to do a full one on that. So just even checking my journal now. So Tuesday, I also took a long position, and Monday, I took a short position, but that was a loss. So taking a look at the hour four, to be honest, not really much in relation to the hour four. We're still within the Monday range. So Monday is currently our high of the week and low of the week. Price action simply had this impulsive move towards the buy side, and now we're simply consolidating within the range of this imbalance right here. So very high resistance price action that's been occurring within this segment of price action here. And what we can take a notice to is how the previous month low is being utilized. We can see it a lot more clearer on the hour 4 compared to the daily. So we're seeing how the bodies are being very respective of the previous month low that resides right there. And yeah, there's honestly not much in relation to the hour 4. We're simply just creating a bull flag right here, which I mentioned a couple of videos ago. But other than that, there is nothing of true importance that is going on right now, as well as the fact that today is Thursday and, well, tomorrow obviously being Friday. So with tomorrow being Friday, the trading week is over and we're still within the range of Monday's deliverance. And tomorrow we don't have any high impact news that we can look to say, okay, we're going to have an injection of volatility to deliver us towards buy side or to deliver us down towards sell side. So if we end up having another inside candle in relation to the range delivered from Monday's price action, I'd be intrigued to see as to how we're going to look to gap open on the Sunday opening. Reason why being is because I'm pretty sure next week we end up rolling into a new month. So Wednesday we end up rolling into a new trading month. So I'd be very curious to see if we have a rather large new week gap opening again, or if we end up opening still inside of this range, and ultimately this range may be utilized to frame a power of 3. But that's me projecting like so far. Well and truly, it's so much easier to just take it day by day. But of course, it's always nice to have a couple ideas in mind. Hour 1, honestly the exact same, just bull flag. We're still within Monday's trading range. In relation to the Asia execution that we took last night, we had the cracking correlation with the previous day's low, and then we had that deliverance up towards buy side, looking for the new day opening gap to be fulfilled, because we had the 1800 candle open and leave a devil's mark, and then we had that deliverance down towards sell side, engaging with the previous day low, cracking correlation with ES. Point of inception occurred from that point, and then we had that deliverance up towards the buy side to engage with that 1800 devil's mark right there, and that is where our current high of the day resides. And then we end up having a Kraken correlation presenting itself right here at these highs, and simply just using a standard deviation to project down to sell side, because I don't have any, there's no hour one standard deviations to project sell side right now as we currently stand. We do have this segment of price action that we can look to utilize, but it's more efficient on the M15, as well as the fact that here there is no sufficient framework in order to grab yourself a standard deviation to project down to sell side. But apart from that, we have this deliverance down towards sell side. For the New York AM trade, what we ended up having is we have this Kraken correlation again with the Tuesday low of day. So all the other correlated assets fail to engage with this low, but then all the correlated assets continue to drill down towards sell side while maintaining this low untouched on those other assets. And what we ended up doing is actually delivering to our OTE. So projecting the OTE of this range, so essentially just Monday's range. So the OTE of Monday's range, projecting that out in time, what we take a notice to is that the 9 a.m. candle ends up coming and engaging with it. And this is where I ended up taking the long position during the AM session. And then when we take a look at the 15, so we have the standard deviation here projecting for sell side. And what I was observing with the standard deviation was the minus 3.5, because it aligned with the regular trading hours busy. So if we switch to the regular trading hours, what we take a notice to is the fact that we have this isolated busy that resides right here, which was unfilled. And that is what price ended up delivering down into for a point of inception to occur, as well as also engaging with the OTE. And there's also one other thing that I would have liked to see price action do, which would have made this trade very, very, very clean. But of course, the trade was still clean, nevertheless, of it not doing one of the other things, which we will get into. But looking at the regular trading hours, you have this M15 BISI right here, which was in alignment with the standard deviation we project, and you have that minus 3.5 that resides right there. And then switching back to the electronic trading hours, we were simply just forming Kraken correlations. So ahead of the 9:30 opening, so we had, where did we have 9:30? 9:30 opens right here, and then we have the 8:30 opening. So today we had high impact news, like I mentioned at the start of the video, simply just being unemployment claims. And what we ended up seeing is that 8:30 ends up coming, delivering down, and we end up forming this Kraken correlation, and we're engaging with this regular trading hours busy right here, which if we're looking at the, if we're simply just looking at the electronic trading hours, the busy looks like this. We simply just gapped under it from the new week opening gap, but it's still being utilized as resistance right here. So we gap under it, and then we end up seeing price action utilizing it as resistance to then form the intraday low of the week. So this is our current low of the week. And then we have this expansive move up towards buy side. And what this does is reclaim this BISI right here. So we'd ultimately look for it to be then utilized as support. But what I am trying to touch on is the fact that the time we end up engaging with this BISI is not the right time, because this BISI is on the regular trading hours. So if we're to simply just take an acknowledgement to the regular trading hours, we know that the window that the regular trading hours will occur from would be the 9:30 opening, and then all the way throughout the 16:14 closing, and that would be your previous settlement close, which we have right here. These would be the closes right here. Now 9:30 is when regular trading hours starts, and that's when we end up delivering into this imbalance, which is why I'm saying that the deliverance into it here during the 8:30 is too early, because we need to deliver to it after 9:30 in order for it to be utilized on the regular trading hours chart, because if it didn't, that BISI would still be technically unfilled in relation to the regular trading hours. We end up forming this Kraken correlation, and we're delivering into that BISI. It's more than sufficient enough to look for a point of inception here, but no point of inception ended up occurring. So what I just decided to do is simply just wait to see if the M15 is going to form an order block. Now one could easily say that, okay, this 9:30 candle is going to end up coming, utilizing this order block to then continue up towards buy side. And that would be a valid thought process, but the only thing that happens here is we end up seeing another raid on stops. And when we go into the lower time frames in just a moment, we end up seeing it very clearly as to how this could have been navigated, because if your stop loss would have been put at the 830 low, and bear in mind this would be a very relative low, 830 low, especially if we have high impact news, this would be your data low or data high. So besides that, if your stop loss was put here at the 830 low, you would be looking for price action to be very sensitive once it came back into this blue shaded area, because you have this devil's mark that resides here on the 845 candle, and then you also have that regular trading hours busy. So you'd be looking for very sensitive price action off the jump, but that is not what we ended up seeing. So jumping into the lower time frames, so we're just going to get through this Asia trade very quick. Now, I don't actually trade Asia often. The only times I end up trading Asia is when I know it has like I know there's potential for a move to unravel like this in terms of a nice smooth low resistance run. Asia is normally utilized for a consolidation, but if I see the fact that Asia can be utilized for an expansive run, I'm open to trading Asia. And the criteria that I was looking at an expansive run for Asia would be, because even so, looking at this is what Asia has done. We have that buy side, and then we have sell side right here, and then we have that buy side deliverance. We do have Asia being our high of day for the day. So this is one of those cases in terms of, okay, Asia has the potential in order to deliver us those low resistance runs in a sense. So going into the day we had, this is from the previous day, we had the PM session. We had the PM session right here from the Wednesday's trading, and you had this high all the way down to this low, and I actually wanted this trade right here because yesterday this was the high resistance run that I was in during the previous day. I was simply looking for this high to be engaged with, and then price action ended up rolling all the way back around, taking me out break even at this change in state right here. So still with the observing of price action, we have that deliverance up into a premium of this range, deliverance back down into a discount of this range that resides right here, meander around the equilibrium for a little bit. Lunch session ends up starting. We have that deliverance up towards buy side, meander around, lunch session closes, deliverance up, lunch high being engaged with, and I was looking for a point of inception to occur here, in which it is. I'm not going to go into the lower time frames because they are not as clean. We had this candle that presented itself, ruining the sequence. Everything was very nice in terms of the time it was occurring at and like all the structure and stuff. It was simply just this candle here, so I opted not to take it. And then we ended up having this cracking correlation that resided right here, but the lower time frames were also not offering the best structure, so simply just decided to ignore it, and would have simply looked to take this down all the way to the lunch lows right here, as this was very clean. Like your lunch lows being a TLP, like that is beautiful. The lunch lows or highs being a form of equal lows or equal highs or a trendline phantom, beautiful, because you're going to see something like this. This candle right here is exactly what you're going to see. Absolute displacement right through it. But with this move in mind, standard deviating this move, what we end up taking notice to is the fact that we have the -2, -2.5 engaged with, a reaccumulation of orders occur, and then we simply fizzle out for the day because the day is coming to an end. So the day comes to an end, and then we end up opening at 1800 right here. We're not to ignore this standard deviation. We haven't invalidated this point of inception just yet. We can still look for sell side to be delivered towards. So we have the 1800 opening right here, and what I instantly took a notice to is the fact that it opens with a devil's mark. Opens with a devil's mark and instantaneous deliverance down towards sell side, and I very much like this. I love seeing this in terms of it just looks like manipulation, and that's exactly what occurred today as well with the 930 opening, which we will get to hopefully very soon. But we have that 1800 delivering straight down, and a devil's mark being presented with a key time opening is also very, 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 very clean. That is very nice to see in terms of when you're looking to frame a certain idea and you're seeing signatures and price action align with what you're trying to frame. So I am trying to frame longs from this point right here, and I'm looking up at buy side, and I'm seeing, okay, I'm seeing a high resistance move down towards sell side. All of these highs are stacking up. I'm seeing that the 1800 has a devil's mark, X, Y, and Z, da 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 da. So that's essentially what we're looking at, as well as these equal highs that resided right here. These highs were not protected, but we have that 1800 devil's mark deliverance straight down towards sell side, engagement with the previous day low, which aligned with the minus 3.5 standard deviation, which is very similar to the setup we had today on the M15 in terms of the minus 3.5 aligning with that regular trading hours BISI. But we have that minus 3.5 aligning with the previous day low, and then what we end up seeing again, deliverance into that previous day low, cracking correlation with ES. And once again, this is what I love to see. Observe the type of deliverance we end up seeing to that previous day low before, like, okay, I completely just messed up everything I was trying to say. Acknowledging the deliverance we had prior to engaging with the previous day low, and then acknowledging the deliverance we had to engage with the previous day low. So all of this price action is very slow, lethargic. We're failing to print imbalances. It's very, very high resistance. It doesn't show any willingness to go anywhere other than very rare occasional times being like this move right here and this move right here. So what we end up seeing is we have this move right here again, engaging with the previous day low. What is this doing? This is tripping people into looking to go short again, because we have a devil's mark that resides right here. People are looking at this like, oh, the selling pressure is so heavy. It's so heavy. The last time we had selling pressure like this, we ended up, delivering from it again, and we ended up delivering from it. They're looking to go short, but this is a point of inception. What we end up having is 1946. Once again, everything is occurring on time. Everything is occurring at a very nice time window. 1946, we have that deliverance up towards buy side, clean change in stay in delivery. We're just seeing devil's marks on the open and the close, on the open, on the close. The moment this candle ended up closing, I'm in the trade, projecting the standard deviation for buy side. And once again, I mentioned this before, when the standard deviations align with a target I've already had in mind, it simply just adds more conviction. I can project the standard deviation and simply wait for the change in stay in delivery to occur, or look to enter off of lower time frame signatures that present themselves. But during the Asia session, it's very spotty price action. So looking at the 5-second, 15-second, there's a lack of volatility. So the candles essentially look like this, and this is the M1. So you can only imagine how spotty the candles are going to look when we're observing the 5-second or 15-second. But change in stay in delivery, projecting to buy side, -2, -2.5, aligning with our new week opening gap. So if I pull that out right here, just above our new week opening gap, and then it's also projecting for this segment of price action that resides right here. We have relatively equal highs. So that was a very clean trade. This midnight opening from the Wednesday trading, projecting that out in time, that is actually where we look to close the trade, because there was a devil's mark that resided right here. Jumping straight into the New York AM execution. So what we ended up having is the 8:30 opening being right here, devil's mark that resided just above it, which is very clean. And as we know, mentioned at the start of the video, 8:30 we had the high impact news, and we had unemployment claims, nothing interesting, but we had that deliverance down towards sell side. So price action spools down towards sell side, and then we have the engagement with this low, cracking correlation, deliverance up towards buy side. Now this is the reason why I was saying that there wasn't any framework for me to even look to say, okay, I'm willing to get on side with this move towards buy side, because there's no clean point of inception here. I'm not even going to bother going down into the lower time frames, because yeah, it's just very unclean. This is a high resistance run all the way back up towards buy side. We printed low resistance here, high resistance back up, high resistance here, low resistance back down. But we have this high resistance run all the way up towards buy side, so there was no valid point of inception. But we have all of this TLP that resides right here. And then we don't have a second stage cracking correlation in this segment of price action right here, as well as the fact that 835, this is still our data low that resides right here. So it's still our data low that resides right here on the M15. Respective to the M15, this would be your data low right here. So deliverance up towards buy side, we end up having that 930 candle opening, and what it does is, again, very much like the 1800 trade, we have a devil's mark that resides right here, instantaneous deliverance down towards sell side. Now, I liked to see this because I was looking at this like manipulation. 930, by this point, we've already formed the order block. So I'm saying to myself, if I'm seeing signatures of price action that are presenting to me bullish order flow, and we're going to leave this low intact and deliver up towards buy side, correcting this devil's mark and potentially rebalancing the range like we had done here, delivering up into an equilibrium, then I'd be willing to take longs. But other than that, I'm looking to see if this low can be engaged with. And with this 930 opening, with the deliverance down towards sell side, we end up having a standard deviation. So from this high all the way down to this low, and we have our -2, -2.5 right here, which projects very nicely for this low that resides right here. And there was one other thing that I would have liked to see this trade do in order for it to be like very, very, very nice. What we do remember is the fact that we ended up coming and engaging with the OTE of the Monday's range, and we also came and engaged with the regular trading hours BISI. The next thing that I would have loved to see price action do would have been to come and engage with the new week opening gap equilibrium, so delivering into a discount of that. It didn't have to. Standard deviation didn't project for it, but if the wicks came and delivered under it, but it doesn't have to. The standard deviation doesn't project for it. The only possible way it could have done this is if the wicks went and done the damage, but the body stayed intact, just like this right here, essentially just like this. But anyway, going into the actual trade, we have the -2, -2.5 cracking correlation, engagement with the regular trading hours BISI, and then cracking correlation with the data low. And what I wanted to then end up seeing was a clean change in sustained delivery on the 15-second right here. So I wanted to see a clean change in sustained delivery, but that did not end up occurring. What we end up seeing is that this candle ends up delivering up towards buy side and then snapping all the way back down and closing inside of this SIBI that resides right here. So it closed the inside of the SIBI, which I took a note of, and then we ended up having these two next candles coming and closing above the SIBI that resides right here, and that's when I look to enter the trade. The next candle I simply just mark it executed. Reason why being is because I'm also observing the other time frames, and I'm noticing the fact that price action is still following suit on the M1. So like a recent video I did in terms of when we're looking at the concentric circles, you want to see everything roll out in a nice fashion. So that was essentially what I was observing. Carrying on, we have a 15-second standard deviation projecting for that buy side delivery. And so yeah, carrying on, we have the 15-second standard deviation projecting for the first presented fair value gap of the PM session from Tuesday's trading. And then we also had an M1 change in sustained delivery as well. And this also had a standard deviation which was projecting for the previous day low in alignment with the 15-second standard deviation. And what we end up taking notice to is price action ends up going into a phase of consolidation once we engage with the lower quadrant of the opening range gap. So we end up failing to engage with our -2, -2.5 of this M1 standard deviation. But when we are looking at the correlated assets ended up engaging with their respective standard deviations. So that would be a cracking correlation in its own form as well. And with that being a cracking correlation in its own form as well, we also have more cracking correlations presenting itself right here. So we know that this high ended up coming and engaging with the equilibrium of this respective range. So from this high all the way down to what was the low of the day, engaging with the equilibrium, and we have the cracking correlation that resides right here. Everything would be pretty smooth for that sell side